If I asked you, who was the best performing hedge fund in 2022, honestly, who would you guess? A lot of hedge funds, because they're essentially tracking the S&P 500, did not do too well. The S&P 500 lost 18% in 2022, but that doesn't mean that some hedge funds didn't absolutely destroy it in a positive way when you look at their returns. So I want to quickly scroll by this. Let's look at it in improving order. Schoenfeld Strategic Partners up 4.5%. Not bad when the market dropped 18. Exodus Point up 6%. 0.72, that's Steve Cohen. They say billions is loosely based on him. He's the owner of the Mets, massive billionaire, up 10.25%. Balyasny, I'm not quite sure how to pronounce it. Atlas Enhance, up 9.7, not bad. Millennium, up 12.4%. D.E. Shaw, kind of a math-based hedge fund, composite fund, up 24.7%. Citadel Wellington, one of the funds within Citadel Hedge Fund, up 38.1%. AQR, a quant fund, similar to Renaissance, but AQR absolute return up 43.5%. Rocos Macro Fund coming in at a whopping 51%. That is crazy. And then I wanted to dive a little bit more into it to realize what these guys are up to. So Chris Rocco's hedge fund soars a record 51% in turn of fortune. So I believe they actually lost last year, but then they made so much this year, it didn't really matter. And the main thing that this fund did was benefited from the short bets on bonds as interest rates began to rise in response to soaring inflation last year. So basically, massive short bets against the bond market. And if you were paying attention to bonds last year, they did nothing but vomit, and it made gigantic returns. But that wasn't the only player to make a killing on shorting the bond. 8 hedge funds that made a killing by betting against the world's economy last year as stocks and bonds plummeted. Check out some of these returns. Flagship Global Macro Hedge Jupiter Fund surged 195%. Heider's flagship Global Macro Jupiter Fund surged 195% last year by betting on steep interest rate increases. Obviously, when interest rates go up, yields go up, bonds go down. It's the same bet. For the last year, investors have been prematurely anticipating an early end to central bank rate hikes followed by rate cuts almost immediately thereafter. But as inflation globally has proven stickier than originally thought, central banks have become more forceful in countering this narrative. They use leverage interest rates trading to generate nearly 200% returns for his investors, which is unheard of. Like, that's just crazy. His fund wagered that the Fed would press ahead with jumbo rate hikes despite markets' hope that it would pause or pivot away from its tightening campaign. Moving on, you have Crispin Odey's European Inc. fund also bet on steep rate rises and capitalized on the political and economic chaos that rocked UK markets in September and October. The fund returned 130% in 2022. The fund generated eye-popping returns shorting the British pound and long-term gilts or UK government bonds, kind of equivalent to us in the US here with our treasury, ahead of the former Prime Minister Liz Truss's tax cut proposal. Veteran trader Neil Berger's contrarian macro fund also scored major returns of 163%. These are just jaw-dropping numbers. Like the previous two, bet aggressively that the Fed rate hikes would swiftly end the era of cheap money and pop everything's bubble that had caused asset prices to soar in 2021. So if you're seeing the trend here, 3 of the major gains in hedge funds came from betting against bonds. That was the big winners of 2022 were the people who bet against bonds. The reason why I started the fund was that central bank flows were going to change 180 degrees. The key difference would be headwind on all asset prices. One had to believe that prices we saw were, to use the academic term, wackadoodle. Definitely a solid academic term. They were wackadoodle. And I think we should use that in our trading process. So just wanted to let you guys know a little bit about some of the best performers in 2022, the people who bet against bonds.